Let's take a look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to explain how BTA analyzes the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. We're going to do a quick video of the Major Index ETFs weekly charts. We're going to analyze the weekly charts. It's not going to take long. Okay, we're going to do a quick video, analyze the index, the Major Index ETFs on the weekly time frame. Okay, that's our longer term time frame. So right now we have a weekly chart of the DIA, the ETF that tracks the Dow Jones Industrial Average. And the main thing here is that we have broken below last week. Okay, we broke below the 150 week moving average, right? We now below the 150 week. Excuse me. And we're testing now the 200 week. We don't break these levels too often. I'm telling you right now, we don't break them too often. So right now we already broke below the 150 week moving average, and now we're testing the 200 week moving average. We have to be careful, okay? Now, this may act as key support. We have to see. The 150 week did not do it. The 200 week is a level that we definitely don't break too often. Let's see if that can hold as support. Maybe I could zoom in a little bit and you can see just how many times we have broken the 200 week moving average, okay, going back several years. Right now, we're back, let me see, I'm going back as far as 2003 right now, okay? We're going back as far as 2003 on the weekly chart. Look at that brown 200 week moving average. It may be hard to see, but I'm just going to put a little line below it. You see that? We broke below it right here. Okay, look like it's back in 2008. We got below it, got back above it. We tested it here back in 2011, going into 12. We tested it. We stayed above it, and we tested it back here in 2015, 2016, stayed above it, and now in 2020, we tested it again. Okay, so you see how we haven't done it much. Okay, it's going back since 2003. It's almost 20 years. Once we tested it, but we didn't break it here. We broke it. We broke it just a little bit here, 2, 3. So 4 times in 20 years. That 200 week moving average. We haven't broken it too often. 4 times in almost 20 years. So you see what I'm saying? Let's just quickly look at that's the DIA. Let's quickly take a look at the SPY and see if we can see with the SPY. So 4 times in 20 years in DIA. Now this is the Standard & Poor's 500. The SPY, the ETF that tracks the Standard & Poor's 500. Here's the 200 week moving average right here. We broke it here in 2008 again and traded below it hard. We broke it here a little bit in 2011 once again. We tested it in 2015. We barely broke below it here for the 3rd time in 2016, and the Corona collapse 2020. So you see 4 times in almost 20 years that the SPY broke below the 200 week moving average. I'm telling you, this is very key long-term support. And every time we broke below it, we didn't stay below it long. Only back here in 2008, 2009, we had a long multi-year recession right there. Hopefully this doesn't become that, right? Where we had a long multi-year recession. Anything's possible. Well, let's hope for the best, because that means there's going to be a lot of pain and suffering, okay? Let's look at the Qs real quick. The Qs haven't broken below it. Wow. Interesting. We got below it a little bit right here in 2008, 2009, right? We broke below it, started in 2007. We almost tested it back in 2006. So, but we got a solid break here, 1, 2, and we haven't broken it again. Came close to it back here in 2011, 10 to 11. So we might want to give it 3 times right here. But for the most part, the Qs have stayed above its 200-week moving average. We're almost at it right now. We're going to look at that in a more expanded when we zoomed in. So you see it, all right? This 200-week moving average is key, y'all. The 200-week moving average is key. Okay, let's go back to the Dow Jones, and let's expand this a little bit, make sure we can see it good. Okay, so you see the Dow Jones is testing it. Right now we closed at 298. 298. All right, we closed this week out at 298. You see it right here. The 200-week moving average is 293. Almost a $5 drop, okay? And then we'll be right at the 200-week moving average. Let's take a look at the structural chart for the DIA real quick. And as you can see with the DIA on the structural chart, right? Let me bring it down a little bit so you can see it. They want to come down. Sorry about that. All right, as you can see on the structural chart, we're right at those March 2020 highs. See that red line? See that red line right there? March 2020 highs, right before the corona collapse. We sitting on it right now. We tested it. We found resistance support at it, and we bounced. Can it hold is the question. Can it hold? We have to see. And now we're below this internal trend line right here. Okay, we're below this internal trend line. But can we hold support, get back above this internal trend line, and try to get back above the next horizontal resistance level at 304.66? 304.66. So right now we're sitting on key support and resistance levels for the DIA. All right, we got the 200-week moving average, about $5 below it, and we got the long-term highs, long-term support level, which is the highs of March of 2020, which is at 295, and we closed at 298. So that's about $3. So we got some levels here that we got to keep an eye on, y'all. We got some key levels that we have to keep an eye on. Let's go to the SPY and take a look at the moving averages real fast, and then we'll look at the structural chart. Okay, so for the SPY, as you can see, we broke below the 150-week moving average. Okay, just like with the DIA. Okay, we go back to DIA, you can see it. Just like with the DIA, the SPY broke below the 150-week moving average, and the 200-week moving average is right below it. Okay, you see that 200-week moving average. We already looked at. We don't break it too often. Here's the 200-week moving average. So the SPY, the ETF that tracks the Standard & Poor's 500, we closed at 365, and the 200-week is down at 349. So we got a pretty good way to go there. Okay, we got a pretty good way to go there. Almost $20, right? We got a pretty good way to go there before we start testing the 200-week moving average. Okay, let's expand it. Before we start testing the 200-week moving average, we got a little bit way to go. Almost what, $15, $20, almost $20, right? So we got to keep an eye on it. All right, we're below that 150 week. Can we get back above it? Can we trade back above it, break above this resistance at the 150 week, or are we going to come back down to this 200-week moving average? One thing is for sure, look at the volume stepping higher as the markets sell off. Okay, this week was triple witching on Friday, so we had a lot of volume on Friday. So we're going to look past that a little bit. But if next week this volume keep coming in, okay, it's going to be telling us that they're selling off on this thing. All right, so that's the SPY on the structure, the moving averages. Let's go to the structural chart and see what that look like. All right, well, we're pretty good ways away from the March 2020 highs, the March 2020 highs. See that thick red line there? See that thick red line? We're a pretty good way away from there, okay? I keep yelling that thick red line, that thick red line. I'm going to keep saying that until y'all get it in y'all head, all right? We got to watch this thing, man. This thing, it can be dangerous, all right? But right now, this week we broke below this key support level at 370. We got another key horizontal support level at 359. We at 365 right now. 359 is a strong level. If we can't get back above this downward trend line on a closing basis and go up here and break back above this overhead resistance at 370 and start going into these internal trend lines, well, we're going to have a problem. Maybe it wants to go back down here and break below support at 359, break below this internal downward trend line, get back inside this channel that it was stuck in for several weeks before we broke out of it. Maybe it wants to get back in this channel. If it gets back in this channel, look out. See that big red line there? That big thick red line? March 2020 highs. Might test it, might break it. We got to be careful, all right? So we want to hold support at 359.16. We at 365 now. We want to hold support at 359.16. Get back above this internal trend line. We don't want to get trapped back in this downward channel like we was over here. All right, we want to get back out of that. Start breaking back above resistance and moving up. Let's see what happens, okay? But at the end of the day, we're not trying to get our head chopped off. We got to watch this thing, okay? We got to watch this thing. Now, let's look at the QQQs, right? Let's take a look at the moving averages first. See what the Q's moving averages look like first. You see, we are at all these key levels, okay? Right now, we trapped between a flat to sideways, kind of moving upward, 150 week moving average and the 200 week moving average right below us on the Qs. My goodness. We closed at 274. The 200 week moving average at 263. It's right below us. Okay, less than $10 is right there. But we see we don't break it too often, but we are already below the key long-term 150 week moving average. Look at that 4 week moving average, that white line coming right down to the 150 week. Look at it now, the 8 week moving average, the green line right to the 150 week. You see all of that overhead resistance. Man, I'm telling you, this thing got a lot of work to do to break back above this. We can run right up to this, hit resistance, fall apart, and break this 200-week moving average. If we start seeing that volume coming in and this thing can't get above that overhead resistance, look out below. All right? Look out below. All right? Problems, as my mentor would say. Not a problem, a problem. Okay? We got a problem. Now, on the weekly chart of our structural chart, look, we got that 200-week moving average right below us, and we also got these internal horizontal support levels right below us, okay? 265.17, 258.91 right below us. We closed at 274 on this weekly chart. Remember, we're looking at the weekly chart of the Qs. Every chart we're looking at is weekly charts right now. We're doing weekly analysis. We got to be in the direction of the long-term trend. Okay, so we got support at 265.17. We got support at 258.91. Look, we come down here and break below this support, get trapped back in this downward trend line. Look, March 2020 highs, maybe here we come. All right, we're going to get out of here and test this 237 level. Will be the next area of interest if we break through this support here. So we got to watch out for the support at 265.17 and 258.91 right here. We don't want to get back trapped in this downward trend line, these downward trend lines, this downward channel. We want to get trapped back in here. We get trapped back in there, it's a problem. All right, we don't want that to happen. So we're going to watch this here. All right, we're going to watch these support levels. All right, but look, 200-week moving average right below it, 263. We got support levels at 265, 258. You already see it. We start breaking that. Look out, March 2020 highs. Maybe here we come. Let's take a quick look at the IWM. And you can see the IWM has already fallen out of bed. Okay, all right. It already fell out of bed. Okay, look at it. Here it is. We're below the 200-week moving average. All right. We're well below the 200-week moving average right now. 200-week moving average is almost $10 below it. It's at 176. We closed at 165. But look what's happened right over our head. Look at all these moving averages coming together right here. All these key moving averages coming right together over our head. The downward trending 4-week, downward trending green 8-week, 150-week right over the top, 13-week, 1 month of average pricing. The yellow line right over the top. Boy, my goodness. The IWM got so much to get through up here. So much overhead resistance here. This is not going to be an easy job. This is a lot of overhead resistance when interest rates are going up. Inflation is going up. Oil prices are going up. Gas prices are going up. War in Ukraine, pushing everything up. Food prices. People don't have any money. Starting to lose jobs. Interest rates are going up. Who's going to be affected? The small guy, the small girl, the small person. What's the IWM? 2,000 small companies. This is a lot to get through with all of this economic backdrop. Look, this is a lot to get through. Did you hear me? This is a lot to get through. Did you hear me? This is a lot to get through with all this economic stuff in the backdrop. Are you digging what I'm saying to you? Can you hear me? Holler at your boy if you hear me, because I'm telling you this is a problem. 2,000 small companies. Who suffer when things get bad? The small person, the small guy and girl. The IWM is in trouble. Even if we get back above this 200-week moving average, we got the 150-week, 8-week, 8-week, 4-week, all right there together. Oh, this is a lot. Okay? Now, look at the IWM. Okay? We already got below those March 2020 highs. I'm gonna make, I don't know why this line won't stay really thick, but I'm gonna make it. See that thick red line there? I'm gonna try to put it back again. Make that thick red line there. You see those two thick red lines? Those March 2020 highs. Okay? Those March 2020 highs. We already below that. We're trying to come back now inside this downward channel. That start happening, we got problems. We already got problems. That's bigger problems. Okay? Right here. You see this here? Internal channel, these downward trending trend lines. See how we were stuck within here for almost 8-9 weeks? Well, we just broke below the 2020 highs. We trying to test this internal trend line for this channel. If we break below that, back below this next horizontal support level, which is right around 150. We at 165. That'd be right around, no, I'm sorry. That look like that's right around 158. Let's see what that is. Let's get a better feel for that. That is right now, the data on that line is 158. Okay, 158. So if we break, we're already below the March 2020 highs, the 170 levels. We testing this internal trend line, which makes up this channel here. We already know we was inside of here for almost 8 to 10 weeks. So we break below this 158, get back below this internal trend line, fall back in this channel. Who knows if we definitely probably most area interest is going to be 142. We might come back down here and test the bottom of this here channel. This thing might fall out of bed. At that point, we might be back down to the lows of March 2020. Forget the highs. The recession might be kicked in and everybody is kicked out of bed. I'm just saying. I hope it don't happen. I want this thing to rally back up. I like to be on the long side because stocks can go to the moon. We know that already. Okay? They can go to the moon. So why not go to the long side? The only thing the IWM could go to zero. But it could go to the moon on the upside. Okay? The moon, baby. Let's take you to the moon. See the stars. Right? Look, this is what I'm talking about. Now look, here's the ITOT. We're going to finish with the ITOT, our key moving average. You see it. We opened up right at the 150-week moving average, traded up to a found resistance, and collapsed. Can it find support at the 200-week? I don't know. We got that downward trending 4-week, downward trending 8-week. The 21 just crossed below the 30-week up top. Okay, the 30-week simple. But look, at the end of the day, first things first. 150 week holding the resistance. We opened up at it, traded below it. 200 week holding that support. We got the 5 and the 8 week, the 4 week and the 8 week right over our head. What is it going to do? Can it find support and get back above the 150 week? If not, it could be a problem for the ITOT. And you know, my daughter loved the ITOT. Okay, why this red line won't stay a thick red line? You see that thick red line right there? Y'all gonna get tired of me saying that, okay? But you're gonna remember that thick red line, ain't you? That's the March 2020 highs, okay? If you don't remember nothing, you're gonna remember the March 2020 highs. I guarantee you that. See that thick red line there? 76.57. We closed at 81.30. Okay? 200 week moving average, right there. Okay? Let's go back and look at those numbers. Let's look at those numbers. 200 week moving average, 79.42. March 2020 highs, 76. We at 81. Not much to go. The ITOT moves somewhere between $2 and $3 in a day. We can get back to hit March 2020 highs with just 2 days of bad movement. And then we back below the 200 week moving average. Problems. Look, real quick. You see this ADX down here? It's telling you. The red line is telling you the sellers are in control. The green line is the buyers. It's down. The buyers has lost control. Sellers in control. The yellow trend line, ADX line, tell you that we have a trend. Is at 36. It's pointing straight up. We got a trend. The trend is down. Sellers in control. ADX is telling you that. And it's got the same picture on all of the other major index ETFs on the weekly chart. So on the weekly time frame, the ADX is telling you on all of them. Okay, if we go down to the DIA and look at it real quick, same picture. Same picture with the ADX, okay? The red line is well above the green. The green is fell completely out of bed. The sellers are in control. The yellow line is telling you that we have a trend. What direction the trend is down. Sellers in control, trend is down, buyers are nowhere to be found. Sellers in control, trend is down, buyers are nowhere to be found. Okay? It's the same thing for the SPY. It's the same thing for the SPY. It's the same thing. Sellers in control. The trend, the yellow line is telling you we got a trend. What direction is the trend in? Down. Sellers in control. Trend is down. Buyers are nowhere to be found. For the SPY. For the SPY. Same thing. Same thing for the QQQs. Okay? Same thing for the QQQs. Sellers are in control. Trend is in the trend. We have a trend and the trend is down. Buyers are nowhere to be found. The volume is completely gone on the weekly chart. Look at the on balance volume. It is out. It is out. You see the on balance volume. You see the yellow line, the on balance volume. This is the QQQ. You see the volume is out. Accumulation distribution is gone. Price volume trend is gone. Volume is out. With volume is out. The big boys and girls, the big institutional investors are selling this thing even on the weekly time frame. Here's the DIA. On balance volume, down. Accumulation distribution, down. Price volume trend, down. The weekly volume and trend is down. Price is down. The weekly trend is down. You don't want to trade against the direction of the longer term time frame. The weekly trend, the weekly chart is our longer term time frame. The daily chart is our intermediate, our middle time frame. Okay, that's our trading time frame. We'll go down to a 60-minute chart. That'll be our lowest time frame. That is just to zoom in so we can get the exact pivot. Look at the Qs. The Qs, same thing. Maybe a 30-minute chart will be our lowest of the time frames. Okay, here, look at the Qs. On balance volume, down. Accumulation distribution, down. Price volume trend, down. Volume is out. They're selling the thing off. They selling it off. The volume is out. It is collapsing. All right, we need to see this volume turning around. Let's finish off with the IWM. You see it. It's the same thing. The volume is down. On balance volume down. Accumulation distribution line down. Price volume trend down. Our volume analysis charts are telling us that the trend is down. The volume is down. The momentum is down. The sellers are in control. The buyers are nowhere to be found. Are you digging what I'm saying to you? Do you hear me? Can you feel me? Holler back at me if you got what I'm saying. I appreciate y'all when y'all hollered back and told me how great y'all did when y'all got that ching a week and a half ago. Congratulations. This is not financial advice. But wouldn't it be wonderful if it was? Wouldn't it be great if it was? But it's not. But what if it was? Ching, ching. You definitely won't blow up your trading account. William J. O'Neill, the Oracle. Jesse Livermore, the Oracle. Granville, the Oracle. You feel me? You hear those names I'm kicking out? Wells Wilder, the Oracle. This is who I learned from. These are the people I studied. And you know we created Lois. You know we created Lois. Here's the weekly chart of Lois for the IWM. You don't see no blue line next to her, do you? You see the IWM for Lois. Here's the DIA for Lois. You see that red line above it? See that red line above price? See that red line just got above price? Weekly swing is down. You see it. QQQs. See that red line above price? See that red magenta line right above price right there? See it? The weekly swing is down. Okay? And you know we can't lose with the stuff Lois use. Until the next video, y'all, we see these weekly levels. Be careful. I know I'm having fun. I love to have some fun. I want us to have some fun while we analyze this stuff. I like to have a good time. Look, I'm looking at charts all day. Want me to lose my mind? If I don't have a little fun with this thing, I lose my mind looking at all these weekly lines all day long. But I got to do it because I want that ching ching. We can't lose with the stuff Lois use. See you in the next video.